Welcome to Financial Fitness Friday. Jonathan Federa here with my co-host Dave Bergio.
What's going on, y'all?
Trifecta Credit Repair. And so last week we came to you and we basically told you, some of the things that you should work on heading into the new year. Now I want to give you guys the tools and the reasoning on how to pay down your credit cards or pay off your credit cards and why it's important. So first off, we're gonna let Dave talk about the importance of credit utilization and paying down those revolving lines will do for your credit. All right, so Dave, take it away.
Thank you very much. You guys, as always, for tuning in on this first official Friday of the new year. But yeah, let's talk utilization here. I believe we touched a little bit on that last week, right? Like when we were talking about, payments and a little bit of utilization history. But guys, remember this. Utilization, credit cards, first and foremost, are the foundation of a personal credit report. Okay. It starts with it and ends with it. We fight tooth and nail with clients trying to explain that because they don't want anything to do with it. It becomes a discipline issue. But that alone is 30% of your credit score, is that utilization. Okay. Number one, from an interest standpoint, it's going to compound higher, even more if you're just paying the minimums. So you're going to get those fees every single month. Even if you're not spending on it, if you are spending on top of it, you're just going to drive that utilization down quicker. And it's a 30 for 30 number. So being 30% of your score, once you really start to get above 30% of utilization, your score is really going to start dramatically dropping. And that is the difference. A lot of times, I know Jonathan sees it. I know we see it. That difference sometimes of just a little bit of 50 to 100 points is usually about the sweet spot that people are losing out of that. That's the difference between, getting some financing or getting a mortgage. Okay. Just from paying down some of that debt. And a lot of people have the assumption, well, I got a credit card for $5,000. If I spend $4,000 this month, if I absolutely need it, yeah, I could pay it off in full next month, or maybe I could just pay, half of it now and then the remaining left, which you're still going to get hit with one more payment of interest anyway. So technically you're going to get rocked 3 times on it instead of 2. You're driving that down. So people assume, all right, I have this maximum here, so I can pay it in full or charge it in full and pay it off or slow play it. You're killing your credit score when you do that. And I don't think people understand that, man. It's a big deal.
Yeah. So guys, the other thing is I want to talk about compounding interest and why it's so important to pay those down, right? If you have, let's say, a credit card at 15%, and most of them are higher now, but at 15%, and you're making minimum payments or even twice the minimum payment, what's happening is there's a lot of interest that's rolling over, and sometimes it's as much or more than the actual payment itself. Like if you notice on your credit card, they try to keep that minimum payment as low as possible. The reason they do that is because if you just keep paying the minimum payment, you're rolling over more and more interest every single month. So not only is it impacting your credit, it's costing you exponentially more because you're paying interest on top of interest, right? Whereas if you're using credit cards responsibly, paying them off at the end of the month, you're not paying that interest, right? So credit cards are a great tool. However, they can hurt you if you're not utilizing them right. And so this is why I think it's so important to actually pay them down, not just for your credit, but so you don't wind up paying too much. Now, there's really 2 ways to approach paying these down, okay? So let's say you have $60,000 on credit cards right now. And, one's at 25% interest, one's at 20, one's at 15. All right. Using the waterfall method, what you can do is you pay down as much, you pay the minimum payments on all of them minus the highest interest one. The highest interest one, you pay as much as you possibly can. All right. With the goal of paying that one down entirely first. And then you'd go and do the same thing with the 20%. But let's say your total that you're paying down every month is, let's say, $3,000. Well, you don't want to pay less than that. Now, if you have 2 cards left, you still want to pay that extra $3,000 to the one that's at 20%. And then once that one's paid off, then you move and you take that same $3,000, right? And you pay down the one at 15%. And that's called the waterfall method. Basically, you pay down the one with the highest interest first, then the next highest, and then, the lowest. Or what you can do is you can get out a term loan. And term loans are going to work over 3 to 5 years. They're only based, and you don't need a business for this, by the way. They're going to be based off of your provable income, so your W-2 income and your credit. And what we do here is we'll have somebody pay off all their cards, consolidate it into one payment over 3 to 5 years, and it's simple interest. And then you could obviously pay that down as much as you can each month, and the interest is just like a flat. So if you're paying it down, you're saving on the interest. It's a longer term line. It's kind of like a car loan. So it's going to help your credit, not hurt your credit. And then your cards are paid off in full, right? Those are really the two ways to pay down your credit. And the reason it's important, you don't want those revolving lines pulling down your credit, your credit. All right. Now, if you're using your credit cards responsibly and you're paying them off in full every month, you're in great shape. You don't have to do anything. But if you're somebody that has kind of let them sneak up on you, please make sure you're addressing that, because that will give you financial flexibility. It'll help you boost your credit, and it'll put you in a better position for this year. Dave, you got anything else?
I'd add to this that can help you pay it off too. But again, it's a discipline thing, because if you don't get this done within that discipline matter, then the best result after that is you're not going to catch up with it. You're going to end up getting a term loan anyway. And you have to have good credit for this, obviously, too. So if you do have a little higher utilization, nothing crazy high, and your credit score is still good, a lot of times you'll get 0% balance transfer offers in the mail. Okay. It's a really good way to do it. Yes, you are adding another trade line. Yes, you might take a little hit, with the inquiry, but it's still a solid way. If somebody's giving you 18 months at 0%, comes with a balance transfer fee. Usually on those offers, they're usually 2 to 4%. So if you have something small, even if you have something small, term loan, yeah, obviously if you have a lot of debt, but if you're talking, $5,000, $10,000, somewhere small in there, this is a really good way to take 18 months, pay that transfer fee. If it's 10 grand, it'll probably be $400, and pay as much as you can off before that 18 months. But now here's the kicker. Don't wait till month 19 and you got a little bit of balance left over, because you're going to get rocked. If that was for 10K, you're going to get rocked on all that interest for 10K. So again, it takes discipline.
I'm glad that you pointed out, guys, anytime there's a 0% deal, okay, just so you know, whether it's care credit, okay, or anything else, if you don't pay it off in full, you get smoked retroactively. Okay.
100%.
So you got to be careful with those. It's a great product if you use it right. If you use it wrong, you're going to pay through the nose. All right. So listen, I hope this helps you guys. I want to be short, brief, give you guys actionable things to focus on and to put you in a better position. Dave, thanks for hanging out. We will finally be back Mindset Monday. Okay. Me and Dave. So appreciate you guys. Have a great day. Kick some ass.
See y'all.